Bloomberg's world headquarters in New York, I'm Shanali Bassick.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, CZ steps down as chair of Binance US as part of a historic settlement with the Department of Justice. The details next.
We will discuss the industry-wide fallout with former Binance US CEO Brian Brooks.
And Danelle Dixon is coming on to join us to talk about her company's role as the intermediary for digital dollars and cash.
All right, so all of that is ahead, but first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is it is broadly an update for digital assets, really rallying across the board. Bitcoin, one of the ones leading the charge here, up 3.3%. We are now north of $38,000. This is the highest level we have seen for Bitcoin going back to May of 2022. So it's been about a year and a half. Ether, of course, taking part in this rally, though it has been lagging behind the recent rally we have seen in Bitcoin to a large degree. It's up by about 2.9% on the day. And that action, and really across the digital asset space, you're seeing tokens moving higher, is feeding back into crypto-related equities. One of them being Marathon Digital. It's higher by about 7.5% on the day. And Coinbase, Shanali, one I know you're paying a lot of attention to, it's up by about 6% at this point in the session.
Coinbase has really been lighting up the internet as well. A lot of people talking about it on the platform now known as X. And remember, it has not only been up every day since we've seen struggles, that big multi-billion-dollar settlement over at big rival Binance. It's actually been on quite a tear, Kaylee, since it's hit its October lows again. Of course, some of that is helped by that love in Bitcoin and other cryptocurrencies, but really it's almost an 80% rise since it retested its lows in October. And if you pull out the chart even more, you would see that it's nearly quadrupled since its December lows that it hit last year. It's too soon to see just how much those troubles over at Binance have meant over at Coinbase, what it's meant in terms of flows and customers moving over, but soon enough, time will tell.
All right, Shanali, well, let's get the latest in the Binance saga now. Today, Binance US announced CZ has stepped down as chairman a week after pleading guilty to those DOJ charges. Let's get more now with Bloomberg's Hannah Miller. So, Hannah, technically, Binance US wasn't part of this settlement, right? This is just an after effect?
That's correct. Yeah, this decision, it was a little unexpected, but it makes sense in the context of what happened here with CZ.
Well, and when we think about what happened with CZ, there was a lot of buzz in the immediate aftermath of his resignation as Binance CEO that he would still be consulting for the company, that there was technically still a role to play. Obviously, the exchange still continuing to operate. How does all of it move forward from here?
So we know that CZ is not going to be involved in governance. He has transferred his voting rights through a proxy arrangement. He will only have an economic interest in Binance US. We know he has walked away from Binance. He has separated himself from the companies that made him who he is today in the crypto world.
And maybe, Hannah, talk through why Binance US is a separate issue here than Binance at large. We know Binance is the largest crypto exchange in the world, but the US was supposed to be a foothold here.
Yes, so Binance US, it's always been emphasized that it's an affiliate of Binance, that there is separate leadership. What has been alleged here is that CZ had a lot more influence on Binance US than what was publicly presented, that he was involved in calling the shots here. Binance US, of course, has tangled with American regulators. Binance, its international affiliate, has had regulatory troubles around the world. So it makes sense here that there's this further separation of CZ from Binance US.
And we should say that CZ can't return to his home in the UAE for now, according to a federal judge. And I want to turn though to another story beyond CZ, because another person who is a crypto titan for a while is Do Kwon, who is also facing his own situation here in the US. Set the stage for what people might expect.
Yeah, so we're expecting Do Kwon to be extradited to the US and to face trial here. So it's going to be another exciting crypto trial on the US stage. There's a lot at stake here for the industry.
Hannah Miller, we thank you now very much for your time. Now we're going to bring in Brian Brooks because he's the former Binance US CEO and a current partner at O'Melveny & Myers. Brian, you spent a whole 92 days at Binance US, and I'm wondering here, when you look at the charges they face, the settlements that have they've reached at the end of the day with the Department of Justice and other regulators, what's at stake and what are the ripple effects?
Well, Shanali, first of all, thanks for having me. I will say, I think that what's at stake might turn out to be a little bit less than people expected. And I say that because, as you said at the top of the show, crypto prices have gone up, not down. And I think there was a lot of fear in the marketplace that, a settlement or a negative outcome for Binance would somehow dry up liquidity in the markets. What I'm seeing is Bitcoin is at a 1-year high today, as you pointed out. Interestingly, the trading volumes on the Binance platform aren't particularly down. I think their 24-hour trading volume as of right now is about $10 billion, which is in line with their post price fall highs. So what it tells me is crypto and Bitcoin in particular have matured to a point where there's no one event, there's no one exchange that's going to collapse the marketplace. That's the good news. I think the better news is that by having some amount of certainty about the current status of the largest exchange in terms of management and board leadership and everything else, maybe we can all settle down and get back to what matters in the industry, which is building decentralized tools, building stores of value, building safe custodians, and all the things that market structure really requires. So honestly, it's a less bad outcome than people might have predicted.
But how is Bitcoin seeing so much love at the end of the day? Some of the charges faced, some of the things that people now know have been quite commonplace in this industry. Terrorist group financing, other illegal activity, drug trafficking. How are people supposed to get comfortable with their exchanges when this type of activity has been coinciding? A lot of plain old Bitcoin trading that has been going on.
Well, Shanali, when you say that these are things that everybody knows, there's always a species of when everybody knows something, that's when you should start asking questions. So the general counsel of TRM Labs and I recently published an op-ed on another Bloomberg platform talking about the true story of terrorism financing versus the media reported story of terrorism financing. And just suffice to say, the idea that Bitcoin has played a major role in financing Hamas terrorism or anything else recently is wildly overblown. And that's for a whole bunch of reasons, largely because terrorists have realized that Bitcoin is the most traceable value exchange network in the world. And so it's a very bad place for criminals to hang out. I think what's really going on here is there is increasing belief that we're going to see a Bitcoin ETF approved probably in January. It won't just be BlackRock, it'll be 10 or 11 applicants going global with Bitcoin ETFs. And the way that I think about that is that's like the IPO for Bitcoin. So Bitcoin's been a really interesting growing niche asset for a long time, but when the IPO happens, when everybody has it in their retirement funds, then it's going to be Katie bar the door.
Yeah, just waiting for SEC approval if and when that ultimately comes, Brian. It does seem like the industry is feeling very much like it is a when, no longer a matter of if. A lot of people say it's inevitable. There is, though, an ongoing conversation, and this kind of comes back to what you were saying about the narrative out there regarding terrorism financing. For example, there is a big push now on Capitol Hill in the anti-money laundering space regarding terrorist financing that seems like it has much more impetus and momentum behind it now than, say, the initiative that would have delineated market structure and jurisdiction between the SEC and the CFTC. And I just wonder if, yes, the industry didn't break, but this maybe changed the course trajectory on the regulatory side and not necessarily for the better.
Well, Kaylee, I think you're definitely right that the wind is no longer at the backs of the industry the way that it was 6 months ago, for sure. And what you're talking about, focusing on money laundering, particularly Senator Elizabeth Warren's bill in the Senate to create new AML controls in crypto, is a big deal. But what I think is important for your viewers to understand about that is this AML push that Senator Warren is pushing is really sort of her most recent justification for destroying the industry, but she's had many others. And so I would be skeptical as to whether the motivation for this truly is a worry about terrorism financing, when we're talking about the same politician who a year ago launched something called, and I quote, the anti-crypto army. So she's been looking for any justification to take out crypto for quite a while. This is simply the most convenient argument. And again, the true factual foundation of it is wildly overblown. I mean, the Biden administration Treasury Department has reported that crypto is a very small component of money laundering and a much smaller component relative to its size than is the traditional financial system. So I think what's really going on here is there's a political opportunity to rein in an industry that's hard to control, and they're taking every advantage of that, which is bad for the industry, possibly not well-founded in policy.
Brian, put some perspective into the forces that are still riding against crypto in the regulatory sphere and in Congress, because the reality of the situation is there have been a lot of lawmakers talking about a lot of things in regard to crypto. There has been almost nothing that has been pushed forward in a significant way, yet you have voters, you have dollars going into Congress in support of crypto. So really, how much pushback is there really?
Well, I mean, look, we have an election coming up, and I think for the first time ever, crypto is likely to play a real role in certain races. Crypto founders are finally being politically energized. People who previously were apolitical are now fully engaged, and you've seen this. So I think that'll play a role in the next election cycle. What I think is interesting, though, is for people to understand what's really at stake in this discussion, because it's not about do you like these tech platforms or don't you? It's not like a debate about Uber or Airbnb, which had their own controversies. What it's really a debate about is how much do we want the government to approve and surveil our transactions? Crypto is a threat to that kind of a surveillance state, which is one reason politicians don't like it. What I would tell you is the fight against crypto has a lot to do with a political viewpoint that has said, we want to know where every dollar in the economy is going. And when I say it's been said, this has been said by the chairman of the European Central Bank, by the president of the Bank for International Settlements, and even to some extent by members of our own Federal Reserve Board. The IRS has a rule that they keep postponing that would require reporting of any transaction in any form of currency above $600. So, paying your dog walker or your babysitter might require you to file an IRS Form 1099-K. Crypto is inconsistent with that because crypto doesn't flow through the normal banking system. So the question is, how much of a surveillance state do we want, and how comfortable are we really with financial privacy? That, to me, sounds like a pretty big voting issue, and it's very different from an argument about something esoteric like anti-money laundering rules.
Well, and of course, all of this factors into the CBDC conversation as well. There is a lot of concern about that potentially adding to this surveillance narrative. Just quickly, Brian, before we let you go, considering that you did for at least a short period of time run Binance US, for other US exchanges, is there a market share seizure opportunity here for like a Coinbase, which has been rallying in recent weeks, as Shonali was pointing out earlier?
Well, in the U.S., absolutely. I mean, Binance U.S., during the brief time that I worked there, had a trading volume in the billions of dollars, and it's now essentially fallen off the map, largely because, it's been asphyxiated of fiat rails to the banking system. So you can no longer buy and sell into dollars off of that platform. So the U.S. exchange is largely gone, and what's left is Coinbase and Kraken, which is great news for U.S.-based, U.S. homegrown enterprises. Globally, I have not seen that change. As I said, Binance.com's market share seems to be as high today as it was 6 weeks ago, and that tells you a lot about the unregulated parts of the world.
All right, Brian, really great to have you today. Thank you so much for joining us. Brian Brooks, of course, the former CEO of Binance US. And speaking of Binance, don't miss our interview with the new Binance, this is Binance, the global entity, CEO Richard Tang. That is coming up tomorrow, so make sure you tune in for that, Shonali.
Yeah, and coming up next, we're going to have Denell Dixon joining us on the show to discuss the digital dollar and converting crypto into cash. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
With Binance, even the transactions that were deemed to have occurred between U.S. persons and persons in sanctioned jurisdictions, the Treasury Department acknowledged that these were only a very small part, less than a fraction of a percent of Binance's overall activity. So, the people that look at this and say, see, this shows crypto is only for illicit activity and this means crypto will fade away, I don't think we should conclude that. I think crypto is here to stay.
That was the former CFTC chair, Tim Massad, speaking to Bloomberg earlier this week. Joining us now for more on this conversation is Denell Dixon. She is CEO of Stellar Development Foundation. She's here with me in our Washington, D.C. studio. Denell, great to see you here in Washington. Obviously, I was here witnessing you nodding along to a lot of what Tim Massad just said. When we think about Binance, the settlement, in some ways this issue being put to bed, is this net helpful or hurtful to the industry more largely, especially when it comes to perception here in Washington?
Well, I think we have to work on perception generally, but I do think it's helpful for a couple of reasons, not just for the industry, but for the U.S. It shows leadership for the U.S. because the fines, while significant, it didn't put Binance out of business. And that's great because it shows that we're willing to be rational in terms of how we approach that. That's a good thing from a U.S. policy standpoint. From an industry standpoint, it feels like we're getting to the place with the FTX trial and SBF behind us, the trial behind us, where we actually have the good actors coming out and shining and showing what the utility of the networks are. That's an important piece. So sort of like now getting to the place where after the internet burst and the bubble burst and we had like a lot of the good players acting, we have that here now too.
Well, and of course you're here in Washington. We were just having a conversation with the former CEO of Binance US, Brian Brooks, who said he feels like the wind has shifted a bit when it comes to actual legislation, from market structures and stablecoins to now anti-money laundering and a different focus on the Senate side, if you will. What kind of tenor are you picking up in the conversations you're having here?
Definitely a different focus on the Senate side, focusing on the banking issues and on the personal information and making sure that we have the KYC rules, and all of those things are really important. On the House side, we still see a big focus on market structure and stablecoin, and we really, really want to see the stablecoin legislation get through. We saw an article this morning, McHenry's pushing it through for the end of the year. We would love to see that happen. It's a really important place for us to show leadership in the United States. We already see the European Union actually come together to create stablecoin legislation. We need to do the same here.
So talk more about stablecoin legislation in particular. What would it do for the industry and how would it start to change things, particularly for stablecoins that have stronger ties to the United States in particular and the dollar?
Yeah, well, we really want to see stablecoin legislation here because it'll actually create a standard that we think that the rest of the world will actually follow suit behind. When we actually see that and we can then leverage these stablecoins, and the U.S. has said, hey, yes, when it comes to U.S. dollar-backed stablecoins or stablecoins generally, here's what you need. You need one-to-one backing. You need auditing. You need to hold it in U.S. bank accounts. All of these pieces are really important to create that leadership and then to create this notice to the market that we're open and we're willing to do business on this. So it creates this opportunity for all of these payments use cases that are already leveraging USD assets to be able to say, okay, we're good. We have the opportunity now to continue in the market and to bring even more players into it. So it is a really, really important step from an industry standpoint, but frankly, it's a really important step from a leadership standpoint for the US to show that leadership. I frankly think it is the most important piece of legislation to get through first, so we can show that here's how we look at this. We're willing to create standards around this. We want this to be something that the world sees us lead on.
Now, there are stablecoins and then there are CBDCs. I want to first have us take a listen to former New York Fed President Bill Dudley and Bloomberg opinion columnist on CBDCs in particular.
Central bank digital currencies should be a pretty significant improvement over cash. It'll be just as safe as cash, but in terms of default risk, because it'll be guaranteed by the sovereign nation. But you don't have worries about storage. You can transact with digital cash across long distances. So to me, it's like cash plus. It's superior to cash, and it's something that the U.S. should start to innovate on.
So it's a big thought. It's a thought a lot of people have had to now, but there has also been a lot of pushback on this idea. What is the likelihood of this conversation moving forward?
It does feel like there's a little bit of a shift where there's more interest here in the U.S. to a CBDC. I think it's mild at this point to see the interest there, but I do think that there's been more focus over the last, I'd say, year to 6 months to a year or something like that. I do think that all the things that he just mentioned, though, are actually, they work the same with stablecoins that are created under licensed and regulated companies that actually have issued them. So we can do a lot of that digital dollar outreach and have those things happen and have it be like used globally and have it be really simple. That all can be leveraged with the existing stablecoin operators in the US that can do that.
And of course, that ties into what you do at Stellar, the cash to crypto conversion, essentially. Speaking of the work you do, Stellar is coming up on the 1-year anniversary now of Stellar Aid Assist, essentially working in Ukraine for humanitarian purposes in regard to funding. How's that going? Are we going to see that potentially expanding to other areas of conflict, like, say, the Middle East?
Oh, it's so awesome to have you ask that question. We're coming up on a year, I think it's December 15th, where the UNHCR, so the United Nations High Commission on Refugees, has actually started delivering aid into Ukraine They've done it now. They're doing it sometimes weekly in terms of the aid delivery. It's really wonderful to see the work that they've done. They're contemplating leveraging this in other countries, so outside of Ukraine. So it is really awesome to see the tools being leveraged for good. And I really want the world to see that this is exactly what blockchain technology can do. Stellar does it really well, but lots of blockchains out there do it too. So instead of focusing on the bad side of things that can happen, let's focus on what's actually the utility and the good stuff that's going on.
Danelle Dixon of the Stellar Development Foundation, we thank you for your time. Now, coming up next, FTX lawsuits are coming to sports leagues, including Major League Baseball and Formula One. More on that next. This is Bloomberg.
This is Bloomberg Crypto. I'm Haley Lyons in Washington with Shonali Bosick in New York. Now let's get to some crypto stories that caught our attention this week, including Major League Baseball, Formula One, and Mercedes-Benz racing team are the latest targets of FTX investors suing celebrity promoters for allegedly helping the exchange to facilitate an $11 billion fraud. Investors' lawyers sued the sports leagues in Miami on Monday. The MLB was the first major sports entity to sign a promotion deal with FTX back in 2021.
Let's also talk about Standard Chartered, because they're going to begin offering exchange services for the digital yuan, according to a statement on its WeChat account. The bank is among one of the first foreign banks to participate in the digital yuan pilot program, and Bloomberg estimates that the digital currency is in use by 260 million people as of August.
And finally, stablecoin issuer Circle entered a pact with venture capital group SBI Holdings to circulate the USDC token in Japan. The partnership will work on establishing a banking relationship and promoting the use of Circle's Web3 services in Japan, according to a statement. Japan has been vying with Singapore and Hong Kong to develop a digital asset hub. And of course, that comes back to the stablecoin regulatory conversation, CBDC, Shonali, essentially everything that we've covered this hour. There's a lot going on here in Washington and, of course, more globally. And I'm really looking forward to getting the take of the new CEO of Binance, who's going to be speaking with Bloomberg's Francine Lacqua tomorrow.
Yeah, absolutely, especially when we're talking so much more about the United States versus other regions across the world becoming bigger and bigger crypto hubs. Can the U.S. compete? This was a massive crackdown, Kaylee.
Indeed it is. Of course, we'll continue to cover it for you, so make sure to come back to Bloomberg Crypto next week, Tuesday, 1 p.m. Eastern, right here on Bloomberg.